There's the headlines. Governments in Europe and the United States writing big checks saying, come and build chip factories. It's going to be great. And Samsung and TSMC gave us better CapEx outlooks for this year. And then we got ASML and things aren't going so rosy. What was your read on that?
Well, actually, ASML earnings really disappointed this morning in Europe, and that kind of raised a couple of eyebrows regarding the sustainability of the demand growth from chip makers and the sustainability of the AI rally. Now, it's important to note that ASML said that the second half of this year is going to see a rebound, and they actually kept their full year outlook unchanged. But obviously, because now we are used to have fantastic results from chip makers, well, the ASML's disappointment has been a sour taste in investors' mouth this morning. And we actually think that at some point, reasonably, the growth and growth expectations for chip makers will be leveling out. And it's just to see if this is the quarter that we will see these expectations slow down. And there is a possibility that we do see them slow down, and that's going to be able to trigger actually a sizable downside correction in profit taking. But more broadly regarding AI, well, ASML also said that they expect AI to continue to contribute to their revenues, and we do also expect AI rally to continue, maybe not in the same way, because we expect some changes within the AI segment. So what I mean by that is we saw so far the first phase, what we call the first phase of the AI rally, benefit to companies, to chip makers, data centers, cloud businesses, all these companies that do provide AI tools to other companies. Yeah. But we are now thinking that there will be a second phase in this AI rally, which is expected to benefit two companies that actually invested massively in AI technologies and tools, and which should shortly start seeing the return on their AI investment. So I think that even though we see some disappointment in terms of chip maker earnings this quarter, the AI rally is not ready to end.
Ipek, broaden that out to the rest of earnings season for us, because, there's a lot of optimism that AI is already going to be helping with costs, for example.
Well, actually, the AI has been the major talking point, and the expectations are quite high, mind you. I mean, looking at the Magnificent Seven stocks, the expectations around earnings growth of around 40% for the first quarter. That's a huge number. That's still down from 55% printed a quarter earlier. But if we single out stocks like Tesla and Apple, who have been in trouble in the first quarter, the expectation of earnings growth goes all the way up to 80%. So now we are talking about a handful of AI stocks, namely Nvidia, Microsoft, but also Google, and we're talking about Facebook and Amazon. So I think that there is a huge optimism out there, but what we will be really interested in is who within this AI segment is going to be profiting from the AI developments, whether it's going to be the provider of AI tools, or are we going to shift towards, the user of the AI tools.